Welcome back to the Blockfield podcast. Last day in January, big guest with us, Tony Acuña Rohter, CEO of EDX Markets. Tony, thanks for joining us.
Thanks for having me.
Yeah, Tony, let's dive right in. You and Sean are Chicago boys, known each other for a while. I'll let Sean dive into how you guys know each other.
Yeah, no, so I've known Tony quite a few years. I was at another startup. He was over, I'll let him tell his background a little bit. He was at Aerotax, and I was over at a mining company that's unfortunately now out of business. And we knew each other from the industry, but also obviously have stayed in touch, and really excited to have him tell us everything about EDX and what he's doing. What's going on over there. With that, Tony, why don't you give us a little background, who you are, how'd you get into this, and we'll take it from there.
Mm-hmm. Yeah, time flies. And so I remember meeting you back in the day when crypto was really, really new. I think that was 6 or 7 years ago now. But certainly my background or my roots really started at CME Group. I spent about 11 years there. I was working on a team that was building the next generation match engine as the trading floors were starting to go away. And so that was really formative for me, because on the one hand, you had the raw power of the markets. On the trading floor, you saw all the guys yelling, and that's such an important thing of Chicago and finance. And at the same time, I was working with a team to put that on the screen, electronify it, and really understanding all the nuances of market structure and how all that worked at CME. So that was super interesting. And that's really where it caught the passion I have for finance, and really always trying to be at the intersection of product and technology, and making sure that we're always modernizing systems, processes, markets really is what my passion is. So having that background and then seeing a new asset class rise up, as was cryptocurrencies and everything that was happening there, I thought it was a great idea to start to transition into that new asset class.
Yeah, no, being in Chicago, I started on the floor down the street from where you were at the CME, at the CBOE. Being in that environment, it was crazy how people would be like, oh, electronic trading's never going anywhere. It's not going to take off. And it's like, all right, sure. Just like smile and nod.
Yeah.
But it's interesting. And then I'll let Jody dive in here, but it's interesting how Chicago is so in touch with crypto and the blockchain community because of all the market making firms, prop, and then really the two largest derivative exchanges in the US. At the time it was two, but now it's combined into one, sit here in Chicago.
Yeah. And by the way, what's wild is everybody knew someone, like somebody, either a trader or a clerk or something like that. So I think markets are ingrained in Chicago at DNA. So
yeah.
No, yeah, Tony, so we were just at Security Trade Association of Chicago. They had a midwinter conference, and a lot of big names there. We had Jane Street, Citadel, a few like others, the big Grayscale, BitGo. And for our listeners that are less familiar with the space, where do you guys fit in? Where do you explain like I'm five? Like, where does EDX fit in the stack?
Yeah, sounds good. That was a great conference. We actually did a panel there. So EDX is a US-based institutional-only exchange and clearinghouse, and that's dedicated to spot crypto. And so what that really means is we're trying to be or follow the model of traditional finance, where we run an exchange, we run a clearinghouse, we really only focus on those pieces of the infrastructure. And we're trying to run an unconflicted business model where, number one, we're not trying to be the market maker ourselves. We're not trying to be the lender. We're not trying to be the broker. And so it's very traditional in that sense, following like the CME model. That's a lot of inspiration there. And I think that actually is something that the markets demand. So we're backed by Citadel, by Verb2, by Fidelity. And we were created because at the time, 2.5 years ago, that structure just didn't exist. And in fact, if you remember 2 years ago, like the pendulum was like the other way. You had FTX, and we all saw how that ended up. So I think that's how you should think about us, just a traditional. We run the exchange, the clearinghouse, and the benefit that the clearinghouse gives, which is also something unique that we offer, is that folks actually don't need to pre-fund all of their trades like is common in a lot of other crypto exchanges. So we allow folks to trade on limits. We run a once per day net settlement. And that's because the clearinghouse is actually the buyer to every seller, the seller to every buyer. We take the counterparty risk centrally. And so that introduces a bunch of capital efficiencies. And then layer on the third component, which is we run an all-to-all market because everyone faces us, right? So a lot of the issues that exist in crypto is the fragmentation, where you have single dealer platforms and you don't have a really robust centralized place
that
to source
counterparty
liquidity.
risk.
Yeah, and so you have that counterparty risk and you have fragmented liquidity. And because we have the clearinghouse, it's just your all-to-all order books. We're aggregating all the liquidity, and that really allows for robust price discovery. Because of our liquidity, we can better absorb volatility and we can centrally risk manage.
Honestly, so really quick, who would be, because all the exchanges we know are more, you have to post collateral if you want to trade. And again, this is not like really retail, I would say. It's more institutional. If you're retail, you come in via an institution. You don't come directly because it's only accredited or not accredited. What is
eligible contract participants as per the CFTC. A mouthful, yeah. But you're right. Like we don't do any direct retail. So I like to joke that if Bill Gates were to come and directly want to open an account with us, we would direct them to his broker of choice. Yeah. So we're not going to deal with any individuals directly.
Yeah. And then Tony, just so thinking about your customer base, a problem that you guys are solving is you have a small app that pops up. There's like the hype app, or you saw when Trump meme coin takes off, Coinbase didn't have it. So a lot of these other exchanges and these new apps are taking off, and it's very important for the whole industry. Like it's retail that is coming into it, but some of these small venues can't and don't have access to liquidity or the capital to post with, say, a market maker to be able to facilitate trading. Hey, we're going to allow you to trade and we're going to not require millions of capital to be posted directly to EDX.
So because we aren't extending credit to all the little apps or that, it's really the Citadels and Virtuals, and then they can intermediate with whoever else their clients may be. So I don't want to give the perception that, hey, you don't have to post anything. And then one more clarification is that you do have to post collateral with us, but you don't have to pre-fund. And so the distinction there is that you can post $1 million and I'll give you $5 million of trading limits. But at a Coinbase, if you want to, and you could sell a Bitcoin at a Coinbase, if you want to sell a Bitcoin, you have to pre-fund the Bitcoin and then sell it. So that becomes very expensive, right? If you can imagine a market maker and you want to make both sides of a market, like you have to, now it's a double capital charge because you have to post dollars for the bid and then you have to post a Bitcoin on all the cells.
Yeah. No, I think honestly, it's really, that's a good question though, Jody, because I don't think a lot of people understand, okay, I come into whatever retail app, I put $100 in, and then I buy whatever small amount of Bitcoin now, given where the price is. And then I just hold on to it. And really here, while you deposit funds, you can lock a trade in and then you settle at a set time every day. So like we all do a trade. I'm not getting that Bitcoin right away. I'm getting it. There's a settlement period at the end of the day where we swap and I get it, you get your cash, et cetera. And it really helps on the counterparty risk because so Tony, obviously I went on to a custodian. That's where I met Jody. And we were working at a custodian. And one of the big problems there that we ran into was like, people would want you to basically extend them credit. And we were a trust company. We couldn't do that. Then people are like, I don't have all this to post and I want to do hundreds of trades a day. And it's okay. So you have to come up with that structure. But that being said, how does the custody model work in this? What assets are you guys supporting? Why don't we start with what assets are you guys currently supporting?
So Tony, to help our listeners understand, a little more at the back end. I think there's a lot of people wanting retail to come into the space, and a lot of the players, and they want institutions to come into the space, but there's several parties that get abstracted away and that are doing a lot of the heavy lifting. How does someone like a Citadel that I mentioned, or some of these larger players, how do they interact with you? How does that trading back end work? And I think people, rest in peace, Jim Simons, people are fascinated by Renaissance technology and everything, the rise of HFT and high frequency trading, but they don't understand how it works. I don't always understand how it works. Enlighten us.
Yeah. So let's talk about, I would say, the three sort of pieces of the value chain here. And since you brought up retail, we can start there. So number one is you have existing retail brokers, so the Fidelity of the world or Robinhood, and their core business is to service their customers who want to be hyper focused on providing a good service to direct retail. And one of the challenges that they have is they need to source liquidity from somewhere, right? And before EDX, or the problem that we're trying to solve, is they would have to go and find trading partners, have bilateral credit relationships, and then integrate to all of these different trading venues. And so what EDX solved is they could just connect to EDX, one-stop shop, because we don't deal with direct retail. We're not a competitor. And so that really simplifies a lot of the workflows and how we can provision liquidity, capital efficient, because we have our once per day net settlement. So that's like on one side of the exchange. Now, on the other side, right, EDX solves a problem for the market makers. And the problem that we're solving for them is we are bringing in these retail flows, right? And that's how market makers make money, right? They're just buying and selling all day long. And same thing, they don't need to go and establish all of these bilateral credit relationships. They don't need to go and integrate directly to so many different platforms. They can just all meet at EDX, right? And so we're centralizing risk management, we're centralizing liquidity, simplifying the workflows. And I think we've been having really good results with that. It's resonating. And in fact, it's more relevant than ever because with the changes in administration in Washington, we see that there's a lot of TradFi that wants to now get into crypto. They're ready. And the space has evolved so much that it just doesn't make sense for them to reinvent the wheel and source their own liquidity or build all of these different bilateral relationships. They should just connect to EDX, and we're just going to handle all of that for them. And we're obviously not going to compete with them because we don't have our own direct retail customers.
You truly are acting in the middle. And that said, how does custody work in this solution? We've seen a lot of interesting things in the custody market for crypto.
Mm-hmm. Yeah, so custody is interesting because it certainly evolved a lot since I started. And the approach that we've taken to custody is that, number one, because you get to trade on limits on the platform, you don't really have to keep your assets on the platform, right? So you can trade all day, and only when it's time to settle, you would send in the assets that you would also, if you owe five Bitcoin, you would send it at settlement time, right? So I think that gives a lot of comfort to firms and choice. If you want to keep assets at EDX, that's fine. You can do it as well, but we don't force you to do that. So that's something that's different than unique. The other thing that we don't do is we weren't trying to do everything like I mentioned earlier. And so what that means is we partner with BitGo, with Anchorage. So they have trust companies, they have robust businesses. And so we use them as our sub-custodians, and we've built a layer of abstraction on top of that. So from that perspective, we don't have to worry too much about all the day-to-day operations of running like a full custodian, right? Leave that to them, and we can focus on our core business. And we're structuring all of this in a way that's bankruptcy remote. So if you do choose to leave assets at EDX, it's super important, right? We never commingle our own assets with customer assets. Our structure is such that the customer funds are the customer funds, and that is very clear.
Novel concept, huh?
We a lot more emphasis on that point in the past couple of years. How do you feel like when you came into the industry and you're like, hey, I'm going to work in crypto and digital assets, and what were the big glaring, hey, this is a problem I need to solve. This is what's keeping people up at night, or this is where I can provide a lot of value from your like CME experience?
Yeah. So I'm very passionate about markets and price discovery and making sure that each asset class has that appropriate structure. And at the time, I'm talking, I don't know, maybe 2018, 2019, it was crazy, right? You had this dislocation of prices between exchanges were getting hacked all the time because people just didn't understand how to do the custody piece. The correct legal structures were in place. You didn't have governance, risk compliance. So I think all of those things were a bit of a mess. You also had some markets that had preferential treatment, and some market makers could get data faster than others. Yeah. And all of those things I'm allergic to. It just doesn't make sense, because if you're not designing your market in a fair and balanced way, you're actually going to fail as an exchange, right? Because the exchange could be victim of something that's called the winner take all problem, right? So if all of a sudden you design your market or your technology in a way that's not fair, or you have some market structure bug, all of a sudden traders are smart. They're going to figure that out. And if they're winning all the time, then they're going to suck all the liquidity out of your venue, right? So I think a lot of these early exchanges suffered from that. They were also cloud-based. So you had latencies in the tens or hundreds of milliseconds, which is really bad for market makers, the high latency, high variability. And so what we have at EDX is we have a match engine that has response times in tens of microseconds. We're in Equinix NY4. Folks could cross-connect if they want to. And that's another important reason why we have deep liquidity, very good risk management, right? Because the system can handle hundreds of millions of messages per day and respond in tens of microseconds.
When it comes to cross-connect and all those terms, like cross-connect for those listeners, really that's two firms that have their equipment in the same data center, and they're able to connect much quicker than having to go from one data center to another data center. So very common in the traditional markets. That said, I think that speaks volumes for an industry that really started 08, 09, and now we're already doing data center plays similar to that of high frequency trading and the demanding aspects there. Obviously this is one thing, but how is that played into like your leadership approach? And this is a volatile market. So how does all of this come into play? And what other things are you guys doing from a leadership approach to, I would say, mitigate and also provide the best infrastructure?
Yeah. So let me touch upon the latency and the cross connect, right? So in times of high volatility, you want to make sure that you have liquidity and that your market makers just don't disappear. And if you have a platform or technology where you can't update your quotes quick enough, you're either going to fully pull out because you're afraid that you're going to have a stale price on the book, or you're going to be very wide because you don't have certainty that you'll be able to readjust your quotes as your pricing engine recalculates everything. So the side effect that we see, or really this is by design on EDX, is during times of high volatility, we continue to have robust markets, deep liquidity, and sure, as expected, folks will widen out like a tiny bit, but it's not like they're fully pulling out and disappearing and getting out of the market. So that's number one. Number two is our systems are really designed for high throughput. So you would see other exchanges crashing all the time. I'm sure you remember, and then you're stuck, right? So you're holding a position and now the price is moving and you can't do anything about it. Yeah. So with us, we have high resiliency, fault tolerance, disaster recovery. We actually had 100% uptime with our match engine since we launched. From that perspective, that is something that institutions demand and expect. And really it's table stakes, right? If you're talking about TradFi, but it's something that I would say the world of traditional crypto hasn't caught up as fast as institutions would want or expect.
Yeah, I think it's table stakes for us, but the average person that isn't really in, and actually this came up on another thing, but the average person that's not in capital markets, they don't probably even have the slightest clue of all the nuances that go into really how the sauce is made.
I think that's right. And maybe their tolerance is a little bit higher, right? Because you're talking about maybe $100 at stake. But when you're talking about real money, that's suddenly millions of dollars of losses. And that's just not acceptable to anyone.
Yeah. So we were with our friend Jonte, like CFO at Zen Ledger last week, and we were talking through a lot of these questions that we got at Stack. Was like, they're like, oh, you work in crypto. Like, what's your take on the Trump meme coin? Is this a joke or is it serious? Is this, which we talked about on some of the podcasts, which is piercing the veil between serious digital assets and meme coin land. So Jonte was like, he was like, hey, I saw this thing launch. And I was like, this is a scam. But then suddenly I see start dropping. And he's thinking about it for a second. Oh, that's just like liquidity being sucked up and people selling SOL to go buy this. And he's like, this is taking off. And then we also saw with Coinbase struggle with Solana and had network issues being able to transfer Solana out. As someone that's very experienced in high efficient like markets, what was your take on all this and hearing this? And you're like, oh, we still have bottlenecks at the chain. If you're looking at, or we still have bottlenecks at some of these exchanges, you really don't have liquidity. If you have a huge event where a big influential person is involved with something, like, love to get your thoughts on.
Yeah. So with performance and these sort of events where something really exciting happens, I always like to say everything is okay until it isn't, right? And so you have to design your systems and processes to be able to handle these crazy peaks, because that's when it matters the most. That's when you're going to make the most money or you're going to lose the most money, right? And so for me and for EDX, it's designed with that in mind. Whether you bring up the Trump coin example, I think that's a fine example, but things that we've lived through, like the depegging of the Swiss franc or like the flash crash that happened in May. So we've lived through these things and we know that they happen and we need to for when they happen. I think that level of maturity will make it into the underlying blockchains eventually. I think it's not there yet, but because we do have that in mind, I think that's another place where clearing is super important, right? Because you can trade on limits. We have this once per day settlement. So again, you're less susceptible to spikes in the blockchain. We have multiple backups in terms of how we can move funds around. And so I think we're taking care of a lot of that just because we understand that these bottlenecks can occur down at the blockchain layer.
Yeah. With that said, where do you see all the changes happening in the backup? It's interesting you said that, because the overall regulatory environment, what do you see happening now with, since we were just talking about Trump coin, what do you see happening going forward? Obviously, we've seen a little, actually a lot. It's been a lot to keep up with, and how are you guys preparing for that?
Yeah, so you're right that we're seeing a lot and it's happening right now. So I think that it would be disingenuous for me to predict it because it's already all happening. So we saw SAB 121 be repealed. SEC has a crypto task force. We have the executive order that lays out clear timelines as to how we're going to get some regulatory clarity. So I think all that is very good. The industry needs it. And frankly, we created EDX with that in mind, like waiting for this moment, right? So for us, it's not like we are adjusting anything, right? We're ready and we've been ready for TradFi to come in. So I think that's going to be the main side effect of all of this regulatory clarity. That's brokers and banks. And we were very lucky that we got to build the technology and hire the team and exercise the processes over the past 2 years so that we can say, hey, doors are open, we're ready for you. So I think it's all perfect timing for us.
Yeah, Tony, as we're wrapping up, what's the best place to like follow you? Are you active on socials? Will you be at any conferences? Like, how do you interact?
So best place to stay up to date with information about EDX is to follow us on LinkedIn and on X. I am personally not tweeting my views of the market, at least not just yet, but I would say this is the best places. And obviously edxmarkets.com is a great resource.
Yeah. Excellent. Tony, we'll be bringing you back on. We're excited to see all the stuff going on at EDX. You got some stellar people over there. Give a little shout out to Janine, great person, known her for a long time. And we're excited. We'll be watching, and definitely, as I said, we'll have you back on. And thanks for coming in today.
Yeah, thanks for having me. It was fun. And would love to be back.
You bet.